day for energy earnings, as you see. Sort of a mixed reaction there on the street to those numbers, as you see. We are back talking stocks with Eugene Profit, and we go to the phones, and Ted in Washington is first. Go ahead, Ted.
Good morning. I'd like your opinion on Oracle, and do you think this $200 million blitz by Microsoft will affect them in any way? Thank you.
Yes, I don't own Oracle. I missed the last move up in the stock. I think Oracle is one of those market leaders that I was referring to earlier that you can buy here and hold for 2-3 years. I think Larry Ellison does a very good job in this space in networks, and so I would be a buyer. I don't quite own it here because I like a few other names a little bit better in the overall technology space.
What do you like better that's comparable or in the same neighborhood?
Sure, I like Sun Microsystems a little bit better. You have the Java language. You had that settlement today with Microsoft. I think that Java is a very good network operating platform, so that's one name. As you will see later, EMC and network storage, not quite the same thing as Oracle, but I like them a little bit better, and I also like Microsoft a little bit better than Oracle.
I think we're staying in the same general neighborhood with our next question, and that's Jim in D.C. Go ahead, Jim.
Yeah, hi, thank you. I'm kind of kicking myself because I didn't buy Microsoft and IBM a few weeks ago.
Sure.
Since then, they've gone up 30 to 46%, and I want to buy these things for the long term. Should I just go ahead and get them now, even though they're up by that percentage, even though they may dip down again to new lows, but if I'm in it for long term, should I go ahead and get them anyways?
Well, Jim, you have a lot of company. A lot of people are kicking themselves for not buying Microsoft during the last dip here. We entered Microsoft, and we felt we were a little early. We bought it in the 58 to 65 range, and, you know, it went down into the lower 30s, so, and it's come back up. I think that Microsoft for the long term is an excellent buy. It's still, I don't see a replacement yet for the Wintel system overall in PC computers. And it's with the Bush administration, the belief on the street is that the company will not be broken up. I'm not sure of that, but I think just from a component standpoint and what they do in the marketplace, it is a good buy. I'm not a owner of IBM. Some of the other names I gave you to the caller before I like a little bit better than IBM here, but I certainly would be a buyer of Microsoft.
IBM, if you see pullbacks or just other names?
Yeah, I think IBM is a good sort of core holding. However, I think they still have a confused platform. I mean, early on, 3-5 years ago, they were the leader in EMC space, and EMC really ate their lunch in data storage, and IBM moved away, and they've tried to come back into it. I think they do have very good management, but they're kind of a behemoth, sort of yesterday's news. They're reinventing themselves, and I kind of like the companies that are already there.
You have some tightened focus in your stock picks too. We'll get to those later, but that's an interesting point. Back to the phones, and Jerome in Georgia is next. Go ahead, Jerome.
Yes, thank you for taking my call. What I'd like to know is, can you give me some recommendations on maybe 2 or 3 companies to look at for a short-term aggressive investment? And also, in becoming an aggressive investor, should I buy those stocks at $40 to $50 as opposed to $100 to $120?
You might have called the right and the wrong person on that question. I'm more of a long-term investor. I have a long-term view, but let me take you back a couple of months. All of the companies that you would consider short-term aggressive investments tanked the last quarter. I mean, I would have been talking about the internet space as with anyone else, and some of those companies were down 60-70% in 3 months, which I guess you would consider the short term. I tend to like to, if you are going to force my hand and talk about the really short term, I would look, I'm more contrarian, I would look to those companies that have exceeded their earnings expectations, but the market didn't respond to it for some reason. And if you can figure out the catalyst that the market will see, those companies tend to perform a little bit better than you would think. But I'm not a momentum type investor. I think that that's a very hard game, and I think it's going to be extra hard in this environment because the market's not going to be forgiven for missteps.
Interesting point. We go to an email next, actually, which is a portfolio question. Got AOL Time Warner, parent of this network, as they say, and Nortel. Interested in another stock, thinking maybe Pfizer, Dell, Microsoft, Cisco, Citigroup, American Express. Now that is a varied set of choices.
Sure.
What do you think?
I think you can buy any of them, really. I own probably 70% of that group. I don't own American Express. I don't own Dell. I think from the lower half of the group, we just purchased Pfizer recently. I think it has not performed as well as it had in the pharmaceutical group, even though the pharmaceutical group is probably reaching close to peak valuations, I think, for this leg of the market. But in that pharmaceutical group, Pfizer is probably the strongest name. I do hold AOL and Time Warner as well as Nortel. I think you continue to hold either of those. And we talked about Microsoft and Cisco a little bit earlier. I would look at Citigroup, which was on your list. One of the bank names that we looked at recently, though, in comparison, we looked at Bank of America. And this goes back to how I look at investing. Bank of America had an atrocious year last year. And it's being held down right now because of concern over California.
Right.
But we still think the collection of assets are comparable to Citigroup. I don't think it has to trade at the same multiple as Citigroup, but if it trades at close to the same multiple, you have a much better risk-reward relationship. So that's, let me throw a different name out to you than what was on your list.
And with that, more broadly, in terms of financial, whether it's a Bank of America or a Citigroup, the common wisdom, if the Fed's on a rate-cutting direction, then you want to be in financials.
That's right.
How do you judge when you're sort of late to the party, or when there's still room enough to get in?
Bill, I think that's harder now. I think because information gets out there so quickly that investors rush into a sector. We've had quite a move in financials, as you know, and so you have to be careful. I think some are probably a little bit more pricey than they should be. Now, for the next 2 to 3 years, you're going to be fine, but everyone's focusing on the next 6 months. I think you might get a little bit of toppiness here in the financial sector. And same with technology. You've had a big run-up the last month, really. They're not quite as high as they were 3 months ago, but I think you probably settle in here a little bit and to make certain that the companies will hit those earnings that they're putting forth and that the economy will not slow more than we're anticipating.
A little more complicated.
That's right.
A couple of factors. Well, we're going to be coming back with more from Eugene Profit and more from you. Give us your calls, give us your emails. You're watching Talking Stocks on CNNFn.